Good morning, everybody. I am absolutely delighted to be with you today. And up front, I would like to thank my friends at Rabobank for inviting me, not only to be able to have a conversation with you, but also to be able to catch up with all friends and colleagues in a pretty special place. My objective with you is to have a conversation about the environment in which you operate, in which we all operate. And I'm going to leave you with 3 themes to keep in mind as you look forward to next year. One theme Jan already referred to, and it's what I call the yes, but theme. Yes, things are getting better, but I don't know if you've noticed, Jan held onto his stomach as if there's something inside, okay? So how do you navigate the yes, but? And how do you navigate the yes, but when both sides are going up? Now, the good news is the net of the two, especially for the US economy, is towards the yes. But you've got to navigate both sides of that equation. The second theme I'm going to leave with you when you talk about the US economy is the distinction between a house and a neighborhood. And I'm going to argue that if the issue was just about the house, the US economy, we have a solid, exciting 2018 ahead of us. But you cannot look at a house without the neighborhood. Would you ever buy a house without thinking about the neighborhood? No, the value of the house depends on the neighborhood. So we're going to talk about the unusual uncertainties, a term that Ben Bernanke used. Not just uncertainties, but unusual uncertainties associated with the environment, the global environment in which the US operates. And then the third element I'm going to leave you with is a notion of the barbell, is a notion of how you operate in an environment where you want to maintain a claim on the upside, but you also want to have resilience for the uncertainties. In doing so, I hope to talk about 3 things that are of interest to you. 1, how the economy, consumers, and companies are likely to do. 2, financial markets. What should we expect from financial markets? And 3, government policies. What should we expect from government policies? Okay, so let's start with the immediate in the US economy, the issue that everybody wants to know about on policies, and there's 2, the Fed in a couple of weeks and tax reform, and how that will influence the outlook. The Fed. Once again, the Fed has very skillfully taken market expectations about a rate hike that were low and raised them all the way up so that the market today expects an over 90% probability that the Fed will hike in a couple of weeks, and that is correct. It is highly, highly likely that the Fed will hike again. What's important to take from this, and I'm going to come back, is that this is the second time this year where the Fed has been able to move market expectations quite radically without disrupting markets. 2 weeks before the March Fed meeting, the implied probability of a Fed hike in the marketplace was 30%. And the Fed moved it from 30% to above 90% through guidance, speeches, without disrupting markets. It did the same thing a few weeks ago. Why am I stressing this? Because we are in the midst of what I have called, and I have borrowed the phrase from Ray Dalio, the founder and head of Bridgewater. He talked a few years ago about the beautiful deleveraging. We are in the midst of a beautiful normalization of Fed policy. Forget the taper tantrum. The Fed learned a lot from that. And the Fed has been able to raise rates 4 times, to change market expectations, to stop QE, to announce a timeline for reducing its balance sheet, and it has done all that without disrupting markets or derailing the economy. That is an important achievement on an uncertainty that was quite high a year ago. So if you were only to worry about the Fed operating in a vacuum, and we know it doesn't operate in a vacuum, and I'll come back to that, then you would be very confident, I am, that the Fed can continue its beautiful normalizations of policies. And you will get, with the appointment of Jerome Powell as governor, as vice chair, his nomination as chair, you will get a signal of continuity and predictability. The Fed is also being helped in another way. We're having a shift that the US economy has been waiting for a long time, from excessive reliance on monetary policy to a more balanced policy stance. The more balanced policy stance has 3 elements that you've heard about, 2 of which are being implemented, the 3rd of which is on the schedule to be implemented: deregulation, a tax plan, and infrastructure. Those 3 elements allow a bigger window for the Fed to continue its normalization. Why? Because they are part of a rebalancing that has been desired for quite a long time. The tax plan is likely to be passed by Congress. It will provide a foundation for higher growth, and it will facilitate the rebalancing of the policy stand. So if you were just to look at the US economy, you would come away with saying policies are contributing to growth. The Fed can and is normalizing in an orderly fashion. And of course, the marketplace has embraced this wholeheartedly. As we heard from the 2 introductions, day after day, it's a record. And I suspect when the Dow opens in a few minutes, I don't know exactly, it will be another record. What's striking is not just that we have all these records in the stock market. What's striking is the volatility aspect. Now, I could cite you to VIX, but the most striking statistic about volatility for me is the maximum drawdown on a daily basis that we've had this year. If you look at the S&P, we have set a record of the smallest maximum loss in the S&P, and I'm talking about the whole history of the S&P, with everything that's going on, North Korea, etc. And that speaks to a couple of elements I'm going to come back to. One is confidence that the synchronized global recovery can continue, and 2 is the conditioning of the marketplace. The marketplace has been conditioned to buy every dip, regardless of the source of the dip. That is why corrections have become less frequent and have been much smaller, because the marketplace has understood that one of the best strategies to make money in the last few years was to buy every dip. And you all know that nothing works better in the marketplace than a strategy that is simple and that repeatedly rewards you. The problem is not with the US economy. The problem is not with the marketplace. The problem is with the environment in which the marketplace and the economy operate. So let's talk a little bit about the buts. And let's talk a little bit about why the buts have been getting higher, even though the yeses have also been getting a lot higher. We cannot talk about global economic prospects without mentioning North Korea. Why? Because it's so unpredictable. The provocations have been brazen, and they have been increasing, and that in itself provides a significant geopolitical shock, the risk of, for the global economy. And while we don't know how to price it, because there's many ways this thing can go depending on action, reaction, it is something that's out there that one has to keep on their radar screen. But it's not the only geopolitical or political factor out there. We have separatist movements in Catalonia. We have the changes in Saudi Arabia. We have important elections coming up in Latin America. And of course, as you saw from the video, we have Brexit, which is a fundamental change in a trading relationship within the biggest economic region in the world, the European Union, that doesn't have clarity. So there's a whole set of geopolitical and political concerns that can impact the global economy and that are very difficult to price. And when they're very difficult to price, what does the marketplace do? It doesn't price them at all. The second set is something that's talked less about, which is the economic uncertainties. And I have three that I worry about. The first is not whether the Fed can normalize policy in an orderly fashion. As I mentioned, I think, and I'm confident it can. The question is, what happens if 4 systemically important central banks decide to do so at the same time? I'm talking about not just the Fed, the ECB, the Bank of Japan, and the People's Bank of China. All 4 of these have been using unconventional policies to stimulate the economy. All 4 of these have contributed to elevated asset prices, and all 4 of these are looking to exit. None are as advanced as the Fed, but all the other 3 are looking to exit. So one uncertainty for 2018 is what happens if all 4 do this simultaneously. There is no historical precedent for this. It's a very difficult thing to model. The second economic uncertainty is our basic knowledge of the functioning of the economy. 3 elements in particular stand out, and we understand less about them today in the economic community than we have certainly in my lifetime as an economist. You've heard Chair Yellen talk about the mystery of inflation. Why hasn't inflation responded? There's a mystery about wage determination. Why haven't wages increased more given the very sharp drop in unemployment to 4.1%? Imagine in Europe, the president of the ECB, a traditional conservative central bank, urging the German trade unions to increase their demands for wage increases. That would have been unthinkable. And yet, it happened. Why? Because low wages are viewed rightly as a problem. And people don't understand why they haven't been increasing more. So the mystery of inflation, the puzzle of wage determination, and productivity. Which leads to the third economic question, the adding up issue, the global adding up issue. Have you noticed that no one wants a strong exchange rate? It's a little bit like a hot potato. Whichever region has a strong exchange rate tries to get rid of it. For good reasons, they don't want any headwinds to growth. But the system as a whole cannot solve without a country or set of countries willing to live with a more appreciated exchange rate. Those are then packaged in a much bigger uncertainty about the impact of technology. And in particular, how technology is not changing just what you do and what I do, but how we do it. And the minute you change the how, there's a whole list of questions that come up. So even though the global economy is expected to grow at 3.5% this year, 3.6% next year, and even though I expect that for the first time in a very long time, there will be a significant upward revisions to these growth projections, with the four global engines all looking better, the US in particular, but also Europe, that will grow at 2 to 2.5% for the first time for 2 consecutive years for a long, long time. Japan and China. So even though the global economy will look better and the balance of risk has shifted in the short term to the upside, there are fundamental questions about its functioning. So if you bring all these things together, you start thinking, well, when I look at this world, I want to retain a claim on the upside because the upside is getting better, but I need insurance against all these uncertainties. It's the barbell strategies. You are worrying about the tails of the distribution just as much as you worry about the belly of the distribution. That is a very difficult environment to operate in. Very difficult. You get accused, you go to your bosses, you go to your board, you say, here's the good things, but, and they say, well, you're just a typical two-handed economist. You have to be decisive. So what do we do when we're faced with this? Thankfully, behavioral science teaches us a lot about how we behave as humans when faced with these very delicate balances. What do we do when the distribution shifts from a bell normal-shaped distribution to a more bimodal distribution? So think of the humps of a two-hump camel being your new distribution. And the thing you have to realize is that it's a fundamental challenge to good decision-making, because we are not constructed to operate in that world. We are constructed to operate in a bell-shaped distribution, in a normal distribution. That's why you're here today. You're here today because your expectation was that Rabobank was going to hold a morning event, and that's why you came. Were there tails to the distributions? Yes, but they were thin. The negative tail was that it got canceled and no one told you. The positive tail was that you were going to get a really exciting speaker and you didn't need your coffee in the morning. But you didn't operate on the basis of the tail. You operated on the basis of the belly of the curve. High likelihood of a particular outcome. The yes, but world is not that distribution. So what do we know? We know that if we here are representative, we will end up in 4 groups. And you don't want to be in the first 3. The first group are the deniers, just denial. Why? Because we have blind spots. We are constructed and we operate with blind spots to protect us. So when we're faced with something that's fundamentally unfamiliar, that is really discomforting, our blind spots tend to operate. So a group of us will not even understand that we're living in this world of a bimodal distribution, will continue operating in a normal distribution. And then depending on which way we tip of the two, because eventually we will tip, they will be very surprised by that. A second group behave in what the behavioral finance call, they reframe things. You hear something, but you internalize something else completely. Couples are really good at this. You hear something from your partner that's not comforting, so you internalize it by interpreting it completely different. Again, it is protection. That's how we operate. Example, if you're leaving, your flight from LaGuardia is at 2 p.m., you know what to do for a flight at 2 p.m. I come along and say, no, I'm sorry, today is a special day. It's not a flight at 2 p.m. Your flight is either going to leave at 8 a.m. or leave at 8 p.m. And I leave. The behavioral scientists tell us that you will internalize this by saying, what do you mean? What does he mean, a morning flight or an evening flight? That's not how it works. That's not what I'm used to. Oh, he must have meant the midpoint of the two. And what's the midpoint of the two? A 2 p.m. flight. So you turn up for a 2 p.m. flight. The third group is the most dangerous. And successful companies in this room have to fight it every day. It's called active inertia. You realize that something is different. You realize that you're operating in a different distribution, but you end up doing the same thing. There's two examples of that, an impolite one and a polite one. Let me start with the impolite one. The American tourist in Paris. They go up to a French person and ask for something in English. The French person goes like this, either doesn't understand or doesn't want to understand. You never know. What do you think the most likely outcome is of that situation? It is the American tourist asking the same question in English, but a lot louder. That is active inertia. You're active, your mind tells you something is wrong, something is different, but you end up doing the same thing. IBM and Don Sull at the London Business School has done remarkable work on these issues. IBM, on the eve of the PC revolution, was best placed to win. The strongest brand in technology, the biggest research and development budget, and very profitable. The research has shown that IBM management and board identified the PC revolution as extremely disruptive to their business model. Not only that, they identified the right barbelled strategy to do less in the belly of the curve, which was the traditional mainframe, and to go out, occupy the PC space, because that's where some of their clients and a lot more new clients were going to come in, and then take their mainframe up the value-added chain. The strategy was absolutely right. It was approved by board and management. It was put in place, but when they started to operate, what happened? The inertia pulled them back to do a lot more of what they used to do and do a lot less of what they needed to do. So if we are representative, there's a risk that 3 groups will end up in the wrong place and only one group will get it. What is the differentiating element of that group? A few things. One, the willingness to look at scenario planning as a serious exercise. And yes, you can waste time, and in the Q&A I can tell you lots of examples in my career where we asked lots of what-if questions that never happened. But unless you get your brain talking about a range of alternative scenarios, you will not maintain the agility that you need. The second element that's really important is cognitive diversity. You must have cognitive diversity around the table. You must have people who are able to look at things from different perspectives. And you do not get cognitive diversity without gender diversity, race diversity, experience and education diversity. And the third element you've got to do is have the courage to ask the most difficult question in business. It is not how will we succeed. We all love talking about how we will succeed. It is not what risks do I face. It is what mistake can I not afford to make. Because when you face not a normal distribution with a high likelihood of a certain outcome, but more of a bimodal distribution, you end up with the probability that you're going to end up facing a mistake. If you do that, you will build the 3 characteristics, qualities in your business that you need to deal with what's ahead, not just in 2018, but beyond. Resilience, agility, and optionality. Those are the 3 things that you need to have as a business to operate in the global environment that we're looking at. So let me conclude before Jan comes up and we take your questions with 2 stories for you to go away. One is the difference between a journey and a destination. As a kid, I was the kid who always asked, are we there yet? Are we there yet? Are we there yet? And my parents were the parents who couldn't tell me because they had no idea about the traffic. They had no GPS. There's nothing estimating what the destination looked like. Today, we're living in a world where the journey is really enjoyable. The journey is of rising economic growth, of very rewarding financial markets, of virtually no financial volatility. But the destination for the global economy is still uncertain because of the yes, but. So make sure that you remember as a kid the difference between a journey and a destination. And finally, because I like sports, allow me to end with a perfect example that I'm sure many of you have heard before, and I apologize for that, of the biggest upset at the time in the world of sports that speaks to the importance of resilience, agility, and optionality, which are the 3 things I think you need to operate in the world in which I think we're going to be operating in. And the story comes from a sport that I don't follow. I love sports, but I don't follow that sport. But it's a very powerful story. And it is the mid-70s, so think back into the mid-70s, there was a very famous heavyweight fight in Kinshasa, Zaire at the time. And all the experts thought they knew the answer. And that is that one boxer, in his prime, the most powerful boxer to come on the boxing scene, who had won all of his fights, most through knockouts, would win. Everybody agreed that George Foreman was going to win the Rumble in the Jungle, as it was called. The only question out there was how badly hurt would his opponent be. His opponent had once floated like a butterfly and stung like a bee, but he was way too old to float and way too weak to sting. His name was Muhammad Ali. And the question was, how many rounds would Ali survive, and in what shape would he be? And they had a plane ready on the runway to fly Ali to Europe to hospital. So all the experts agreed this was the most likely outcome was knockout, Foreman wins, only question mark is how bad is Ali hurt? In the event, Ali won. He won in the 8th round. He knocked Foreman out. One of the biggest surprises. So believe it or not, there's been research done. And why am I telling you this? It's because it speaks directly to what I talked about before, the yes but, the bimodal distribution. The Ali camp realized immediately that they weren't operating in the old normal. What was the old normal? You put Ali in the ring, you hope he can survive for the length of the fight, and you hope that maybe he can win on points. But they were facing a really powerful opponent. So that strategy didn't work. In fact, they were facing a complete bimodal distribution. And it was the worst of all bimodal distribution. The left tail was very high, that Ali would get seriously hurt. The right tail was relatively low, that he would win. And the middle of the distribution was almost zero, that he couldn't last the full 15 rounds against Foreman. So they went and said, how do we deal with the bimodal distribution? How do we change it to make it something that we can live with. And they did two things differently, just two. The first thing they did is they changed the training routine. Instead of Ali getting into the ring, the practice ring, and exercising around and doing everything, he just stood there, and for 2 to 3 hours every single day, they hired former convict to beat up on him, just beat up on him. Why? They were developing his resilience, to give him more optionality. And then the second change was on the day of the fight. Everybody expected Ali to come in the middle of the ring and not get trapped. Because if he got trapped against the ropes, he was done. A sitting duck, as the commentator says on YouTube. But Ali comes out, and instead of going to the middle of the ring, he goes against the ropes and puts his hands up. And everybody thought that is the stupidest thing that Ali could do. But they had done a lot of scenario planning. And what they figured out, looking at the different scenario planning within the ring, is the best place to be was against the ropes. Why? They had invented the rope-a-dope. The notion that as you go against the ropes, the flexibility of the ropes helps you dissipate some of the blows you get. For 7 rounds, Ali relied on the resilience that he had built, doing things differently. He maintained full optionality. In the 8th round, Foreman got tired. Ali had an opening. Ali pivoted to agility and knocked him out. In a world in which the house looks good, but the neighborhood looks uncertain, in a world in which the yes and the buts are both going up, make sure you have this combination of resilience, optionality, and agility to be able to navigate what's ahead. Thank you very much.
Thank you, Mohamed, for your great insights there. You left me more positive there, I think, in the end. That's no small feat, Mohamed, in a world that has plenty of troubles. Ladies and gentlemen, by all means, use your app to start posing questions. I'll soon ask you to raise your hands, but I have a more pressing matter to start with, and some personal advice. And I think I haven't made any mistakes that I couldn't afford to make. But I need to overcome some active inertia, I think, and it's about Bitcoin. So you skirt a little bit around it. Should we be buying it?
I didn't skirt, I didn't touch it.
Exactly. Should we be buying it? Should I be buying it?
So you're looking at someone who, first of all, let me tell you, it's very striking. I was flying back after dropping off my daughter on United Express at school, and the flight attendant wanted to talk about Bitcoins and asked the same question. And I said to her, a friend of mine asked me whether they should buy Bitcoins at half the level of where they are today, and I said no, and I was completely wrong. Look, there's two, as you know, Jan, there's two different elements that have been put together in this Bitcoin phenomenon that are very separate. One is real, it's genuine, it's going to last for a long time, and that is the technological innovation of blockchain technology. That is a major, major advance. Expect it to be used increasingly in both the private and the public sector, and it will result in efficiency gains. The other element is the notion that Bitcoins in particular are going to attract massive adoption. Why? Because they'll become a currency. I think of Bitcoin today as a commodity, with not clear what the use of the commodity is, but it behaves like a commodity. But there is a presumption by a lot of advocates of Bitcoins that it will become a currency. And when you become a currency, you have massive adoption. That's what a currency means. You adopt it for a store of value. You adopt it as a medium of exchange. Right? That second bit is what gives me problems. I do not see Bitcoins attracting the amount of adoption that is implicit in the price today. Now, that doesn't mean they're a fraud. I don't think they're a fraud. It's a real phenomenon. The question is, do you believe that they will become a currency? And I have a number of reasons why I don't believe that that's going to happen on the scale that the price suggested. So bottom line, if you're a long-term investor, I wouldn't be buying Bitcoins here, but I did say this at half the level of where they are today. So take that with what it's worth.
Yeah, there's some worrisome trends there. I think one of the analysts in my team said that one of the most Googled terms at the moment is buying Bitcoins with credit cards. So quite a concern there. I want to open the floor up to questions and see if we have a question already. You had some time to think. Please raise your hand. We have one over there. Please, we can get a mic over there. If you can wait till the mic's there so we can all hear the question, that'd be great.
This is a very unstable equilibrium here on the chair.
You don't get in trouble, else we'll stand up.
Hi, Mohamed. Thanks for your perspectives today. The notion of synchronized global growth scares me because of the reasons you mentioned, other central banks unwinding. What is your opinion of that?
So first, you're absolutely right, that the more synchronized global growth is, the more likely that you'll have a simultaneous attempt to normalize monetary policy. Okay, and that's, they say be careful what you wish for, and that's what you would get on there. And as I suggested, we don't know what happens. I have reasons to believe that the market has been conditioned to expect that central banks will always have the market's back covered. I label it the BFF phenomenon, that central banks are your best friends forever. And I think that's naive. Central banks had no choice in 2010 but to step in to fill a void. If you remember in the US, 2010 was the rise of the Tea Party, the midterm elections were coming up, no politician wanted to be seen as collaborating with the other side, right? And therefore we had complete paralysis. So when the handoff came for the Fed from normalizing disrupted market, which it did really well, to handing off to the other policy-making entities to promote genuine economic growth, there was no one to hand off to. So the Fed, like the ECB later on, like the Bank of Japan, felt a moral obligation because it had more autonomy to take on the responsibility of delivering economic outcomes. But Ben Bernanke was very clear in his speech of August 2010 in Jackson Hole when he said, when we use unconventional measures, not to normalize markets, but to pursue broad economic objective, it's about, quote, benefits, costs, and risks. And the longer you stay in that regime, and no one imagined that central banks would stay in that regime for such a long time, the lower the benefits, the higher the cost and the risks. So the markets have to understand that the use of the asset channel by central banks, which means repressing financial volatility, is not an end in itself, but it was a means to another end. And if that other end is being delivered because of a policy handoff, which is good, it means that central banks will look to normalize more rapidly. So that has to sort of, now the hope is that the handoff happens in such a smooth manner that financial risk-taking, which has been up here, is validated by fundamentals improving, and you no longer need the liquidity cushion. That is the hope. But as you point out, and as I said, that hope, I think, is very realistic if the Fed were the only one to normalize. It becomes a more challenging maneuver when and if you get all four to do that. So that's why that's one of the big risks out there for 2018.
Howard, you talked about Fed policy rate, about policy rates of central banks. How about the long end of the curve? Because we've seen some governments, probably smartly at the moment, issue 100-year debt or even perpetuals there almost. How concerned are you that we'll see a significant rise in the long end of the curve?
So I think, first of all, the shape of the curve, people are tempted to read the usual economic information in a flat curve. I would warn you, don't do so. There are today almost forced buyers of our long end of the curve. There are two. liability-driven investment, entities with long-term liabilities that have seen their stocks do incredibly well, that are de-risking, they're de-risking by selling stock and buying longer-dated securities that match their liabilities. And secondly, by the direct and indirect effect of what are still significant purchases of securities by the Bank of Japan and the ECB. So if you want to explain the shape of the yield curve in the US, you've got to put these two factors in your equation, and they do not reflect the economic situation. So the biggest risk to the curve, I think, comes less from the Fed and more from what the ECB and the Bank of Japan do. That's my, okay? So if you want to model a spike in rates, you have to assume that the QE in Europe that becomes QT, quantitative tightening, in that scenario, it's an assumption, this is not the baseline, is done in a disorderly fashion. And then you start worrying about what you talked about.
Great. Let's see if we have another question there. Plenty of them. Let's start over there. The gentleman over there.
I'm just interested on your view about national debt. It was something there was a lot of discussion about previously, and obviously it's been part of the discussion with the tax plan and the concern that debt may be further increased. I understand the idea of growth, but what's your view about what impact will this debt continue to have, and what direction do you think we should ideally be trying to head to? Well, not to repay, but to, what should be the outlook for debt, I guess, is my question.
That's a great question. And we talk about debt because we worry about debt sustainability. Debt in itself is not an issue if your income and wealth is huge, right? What makes debt a question mark is it sustainable? So I think of that debt as being a fraction. It is what your obligations are, how they are structured, in what currency. That's the numerator. But the denominator is as important, is can you grow your income to service that debt? So the first thing is you never want to look at the numerator without also looking at the denominator. And right now there's a tendency, unfortunately, just to focus on the numerator. But it's a fraction. And if growth picks up, and that is what you have to assess about the tax plan, if growth picks up, then the rise in the numerator is more than compensated by the rise in the denominator. Now, why is that important? Because if you grew up working on emerging economies, I did, Jan did even more because he lived there, and you've seen these debt cycles, you know that basically there's only 4 ways to deal with debt problems. One is to default. You don't want to default. It's very costly. 2 is to seek an orderly restructuring. But it's actually very hard these days to get that sort of orderly restructuring. 3 is through financial repression. What Europe is doing, take interest rates negative in order to subsidize the debtor and tax the saver. That's not a great equation. The 4th way you want to do it is by growing, by increasing income. So you can not only meet your debt obligations, but you can also improve your standard of living. So again, the debt sustainability, I think that if you look at it, the hope, and I think there's very good reason for that hope, is that that ratio will be driven by the denominator growth and less by the numerator debt.
Thank you, Mohamed. You skillfully also included a question of someone asking, what about the tax reform? Should we be worried about the 1 trillion addition in debt? Got a good question here. Someone wondering on the app, GDP, is it actually the right metric to look at? And I would like to add something that's been puzzling me. Mohamed, how can it be that we live in a time of wonder, right? And we have all these apps and distortions and technological developments, and yet productivity sucks. It is so small. Right. But how can I put this together? Are we measuring that wrong as well?
So first of all, the productivity puzzle is a really strong one, okay? And I don't have an answer to it. I suspect there is a mismeasurement element to it, but there's something else that all of us is a strong phrase, but many of us engage in, is that we are behaving differently. When you use Uber, when you use Airbnb, what are you doing? You're fundamentally using 3 technological advances to use existing assets better, existing assets. Right? You're using artificial intelligence, big data, and mobility that allow you to do it. And the scale of that is huge. There's an example that was pointed out to me 2 years ago. The Hilton Corporation, 100 years to deliver 700,000 rooms to their clients around the world. 100 years, 700,000 rooms. And they knew the model, how you manage a hotel, et cetera. Airbnb, 6 years, 1 million rooms. And Airbnb has a model that's completely different. You know, for Hilton, Airbnb was a competitor from another world. They didn't even feature. Now that changes the dynamics of how the global economy operates, that changes the dynamic of productivity. The second element that I want to stress is that the movement from growth that has been not just too low, but insufficiently inclusive, to more inclusive growth. That is a critical pivot. The US population in particular, Europe is another place, but the US population will tolerate quite a high level of income and wealth inequality. Why? Because there is conditioning that if you're successful, you should reap the fruits of your success. Yes, Mark Zuckerberg should be a billionaire. He invented something that is remarkable. But where the US population has issues, and then multiply that by 100 when you go to Europe, is when it's not just an inequality of income and wealth, but when it's the inequality trifecta. Income, wealth, and opportunity. And when the opportunity element enters the inequality equation, then the dynamics of inequality change completely. And that's why it's really important not just to deliver higher growth, but to deliver higher and more inclusive growth.
Very clear. I'm going to take one question here from the audience there. We'll have one in the back, all the way in the back there.
Yes, hi. So one of the key points I took away was the idea of building resilience into your business. And I was just curious, what businesses and what sort of resilience do you think are going to succeed in this kind of bimodal paradigm?
First, balance sheet is really important. Okay, balance sheet is absolutely critical because balance sheet not only gives you the resilience, but gives you the agility. Right? So you want to run with a relatively strong, solid balance sheet. You don't want to be reliant on short-term funding, and you want to have that. Second is mindset. And if I may, Jan, let me take it back to an example, because I've repeated this so many times, and Bill Gross has repeated it, and other PIMCO people have repeated it. Conventional wisdom still says today that PIMCO predicted the global financial crisis in 2008. Why? Because our clients did relatively well in the months that followed. We have gone out of our way to say, actually, we didn't predict the global financial crisis. In fact, here's what happened. The weekend before Lehman Brothers defaulted, when everybody was gathered nearby here at the New York Fed, and there was talks about would Lehman be taken over by Barclays, et cetera. We, back in California, were in the investment committee room, and we had 3 scenarios on the board, scenario planning. Scenario A, we gave the highest probability to, which is that Lehman would not fail, that this would be a Bear Stearns of 6 months earlier, that Barclays or somebody else would take over Lehman and would wake up the next day, just like when JP Morgan had taken over Bear Stearns, with systemic risk being taken out. We gave that scenario the highest probability. The second highest probability went to Lehman fails, but fails in an orderly fashion. Why? because we thought nobody in their right mind would put the payments and settlement system in place, in play. You don't want your payments and settlement system to be in play. And we, being in the marketplace, had seen all the counterparty issues arising, and they were starting to infect the payments and settlement system. We gave that the second highest probability. And what was the lowest probability? What actually happened. That Lehman would fail, but Lehman would fail in a disorderly fashion. Now, the good news is that for every scenario, we had a very detailed plan on what to do. So when, at about 11 o'clock at night on that Sunday, we realized that scenario C, we didn't get paralyzed because, oh my God, we got the probabilities completely wrong. Yes, we had. But we had a very detailed thing, including our lawyers going out and giving the statement of failure so that we can reestablish the positions elsewhere. So it's really important when you ask about how to do resilience. It's not just about balance sheet. Yeah, balance sheet is really important, and I put that first, but it's also about mindset. The mindset of being able to go through, there are different scenarios that are possible out there, and here is what I would do in that scenario. Now, most people don't do that for good reasons. It's very time-consuming. Very time-consuming. You end up by predicting things that never happen. But you're not predicting. You are establishing a mindset training that allows you to look at different possibilities, recognizing that parts of the global economy and the geopolitics are unusually uncertain. And remember that phrase. Mervyn King, the former governor of the Bank of England, has a much stronger phrase. He calls it radical uncertainty. Not just uncertainty, but radical uncertainty. I prefer using Ben Bernanke's phrase of unusual uncertainty.
You speak about scenarios. We got a question on the app here asking about key risks facing the global economy. You gave us a list, but going sort of for the next couple of years, what is the key risk you are most concerned about?
So I don't think if you take me to the negative tail, okay, we're not looking at the 2008 scenario. There's a huge temptation to think that if we get a crisis, it will look like 2008. It won't, for two basic reasons. One, the banking system is in a very different place, very different place. The banking system has been de-risked through, first and foremost, very much higher capital cushion. Two, a different list of activities. And three, much better understanding of the balance sheets, in particular the liability side. So for me, if you're looking for a risk in the financial system, it doesn't come from the banks. It comes from the non-banks, and I'll talk about this in a minute. The second reason why it's very different from 2008 is that central bankers have understood how to insulate the payments and settlement system. The payments and settlement system is really, really critical, and it is what results in a sudden stop. And I was trying to explain this to my daughter, and when I said payments and settlement system, she completely, went blank. And I said, when we go pick up your McDonald's meal? Because California, where I live, is a car culture. We're very proud of our cars, and we're very proud that you can come in and out of a McDonald's drive-through in less than a minute. Okay, in fact, when you order, a stopwatch starts that you see at the windows. Now, why does it work so well? Because the payments and settlement is separated. You remember, you order your Big Mac, they say meal, $5, you go to your first window, you pay your $5, you drive a few feet, and then you pick up your Big Mac and you drive away. Now, what happened in 2008 is no one trusted these few feet. So imagine you go up you order your Big Mac, you go to the payments window, and they say $5, and say, well, here's my $5, I have it. Where's the Big Mac? And they say it's a few feet down, and you say, I'm not trusting these feet. I heard what happened at Lehman, at Burger King. Okay, I want instantaneous payments and settlement. And they'll say, we're not built for instantaneous payments and settlement. So you go away hungry, even though you have the money, and the next window throws away the food, even though they made it for you. That is why a payments and settlement system causes a sudden stop to the system. Central banks have understood this really, really well. So the two risks that were really problematic in 2008 are low risks today. What is the biggest risk, I think, today? Again, in the risk scenario, is the transformation that has occurred in the non-bank sector, and in particular, liquidity transformations. There's been a proliferation of both good ETFs that provide the promise of instantaneous liquidity at reasonable bid-offer spreads in liquid markets. Those are good ETFs, and less good ETFs that are trying to do the same in inherently illiquid markets, segments of high yield, segments of emerging markets. That area here is where the system has overpromised liquidity. And if you are to look at a financial risk, this is what we have to understand better. It's not as bad as the payment settlement system, as the banking system, but it's something that you should keep an eye on.
Thank you, Mohamed. I want to take one or two more quick questions from the audience, if we have any there. One over here. So let's keep the questions brief and the answers brief as well, and we can get a few more in before time's up.
Sorry, this is a long question. No, I'm just kidding.
I'll give it a short answer.
Okay. When you're describing the orderly, the hope is the orderly handoff of the federal banks, and that you're going to have the Fed, who is more developed, go forward. Can you describe where is that on your curve? Is that looking at it bimodal, or is that what the hope is? And what are the two sides of that curve? What are the two tails of that curve?
So very briefly, the good mode is higher and more inclusive growth, validating elevated asset prices, normalizing policy. And you get that through the policy handoff, elements of which are taking place. And the good news in all this is that most economists agree on the engineering of this. It becomes a political issue, political implementation. But the engineering element, most economists agree on. And if we had more time, I'll give you the four elements of that. But most economists agree there. The bad tail is the handoff doesn't happen. Central bank unconventional policies become less effective. Elevated asset prices are not validated by fundamentals. People lose trust, and you get financial instability. The defining characteristics of the two is whether you get the policy handoff. Okay, and that's the critical issue on there.
The last question is actually from the app, because I do think we need to ask this. I think a lot of people are wondering this, Mohamed. If you were to put your own portfolio together, right, what asset class would you favor for the next 12 months?
Yeah, that's the second question I always get asked on planes. And I keep on telling them, this is like asking a doctor what medication you should take without the doctor knowing what your symptoms are, right? I don't think you can answer that question without knowing what your starting position is. How much risk are you willing to take? The biggest mistake people make is they end up doing the wrong thing because they're doing it out of fear, not out of thing. So if you tell me I have long permanent capital forever versus I have capital for 2 years, I'm going to give you completely different answers. But the one thing I will tell you is just keep in mind the bimodal distribution. And today, by the way, I put out a piece last night because I was very struck that people are increasingly using passive products, not just to lower fees, understandable. Okay, I understand that. Not just because they have doubts in terms of active investing, I understand that too, but they're trying to do it as the shortcut to resilience and agility. And I'll tell you, be careful, because that is not a really good shortcut. Thank you.
Mohamed, what a great insights. Ladies and gentlemen, can I have a warm round of applause? Mohamed El-Erian.